most of the Asian indices are also rather flat.
And if you're looking at ranges and how to trade, I mean, for the Nifty, yesterday's high, which is 22,910, will be the near-term resistance.
Well, as a rule, monetary authorities prefer status quo when the fiscal side is a bit uncertain.
Well, Wipro's won a very large deal. It's a $500 million deal from a US communication service provider.
Morgan Stanley note on specialty chemicals, it is downgraded. SRF, Aarti Industries and Tata Chemicals.
The sensex is flat. We're in the red, 75,043. So
Policy repo rate unchanged at 6.5%.
23,000 has been scaled. It's a 1 percentage point plus gain on the benchmark indices.
Foreign leaders, heads of state, heads of government have been invited for the swearing-in ceremony.
Some moderation in these advances. We are closely monitoring incoming data and to ascertain if further measures are necessary.
Watching the incoming data and any measures, if necessary, will be basis the reading of the data.
एनडीए के नेता के रूप में आप सब साथियों ने सर्वसम्मति से चुन करके मुझे एक नया दायित्व दिया है.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's the day so far. You're with us here on Closing Bell. And what a day we are having. And I was looking at the numbers on the screen. And it's Aaj ki par 400 par. You know, it's 400 plus on the Nifty. Bad joke, guys. But, it's 400 plus. It's a phenomenal day once again. And we had thought in the morning that maybe things will quieten a little bit. Volatility will subside and we'll have a more settled kind of a day, but nothing doing. We are basically on track to making all-time highs once again, within 100 points of it. I'm Prashant. With me, my colleagues Reema and Surabhi here. Nigel is with us from the newsroom floor. Nigel, guys, good afternoon.
Hi. So all-time high par or not par today? In the next 1 hour. That's the question, right? Now it's not even 100. Now it's, I think, less than 70 points away.
The high of the day is 23,281. So we slipped from that high, but there's 60 minutes to go. So let's see.
I mean, it's just amazing, right? And I think obviously I can't say for everyone, but I spoke to 2 or 3 people, and there is general sense of a little bit of amazement more than anything else. I mean, so the buying is all, of course, coming in from the HNIs, the locals, retail, etc. Of course, local institutions, mutual fund institutions, FIIs, that number we've been tracking every day. For the week so far, they've sold 18,000 crores. Including that buy number that came through on Monday. And then, of course, for the last 4 days, they've been sellers. Locals have put in about 7,000 crores. There is of course, there's a big difference, 11,000 crores difference, right, between the FI selling and DI buying. And, forget about covering that gap. The market's, of course, gone the other way. So this is really powerful moves that we have on our hands. We don't typically see that. After a big fall like that, I mean, forget about a V-shaped recovery. This is an I-shaped recovery, right? I mean, you fell and then you almost with that same ferocity, same bounce, you're back where you kind of landed. So quite amazing. I think all we can say. Just a couple of points. Of course, I mean, the new highs come into view. In the morning, I was saying that the resistance will be yesterday's high. We put about 300 points on top of that. So that's the kind of momentum that we have. Now, 100 points away from the highs, Infosys and Reliance themselves are adding 100 index points. 100 out of this 400 is coming in from 2 names, Infi and Reliance. I was talking about IT same time yesterday, how it's been a quiet mover and not discussed. I mean, all the attention has been about rotation into FMCG and staples. But actually, the real rotation in a way has happened into IT. The IT index is up 8% from the 3rd of July close. And I took 3rd of July to look beyond that election volatility on the 4th. So from the 3rd of July close, which is last Friday this week, that is, the IT index is up 8%. Bank Nifty is a little bit of an underperformer today. It's up about 1% or so. Reema.
Well, IT's been the surprising mover, right, this week. No one saw it coming. Everyone thought perhaps the move, the rotation away from PSU's defense, railways, maybe PSU banks will go into the FMCG. And FMCG did very well. The Nifty FMCG index is up close to about 6.5%, but IT has stolen a march even on the FMCG index. Individual names, even today, Wipro is rallying on the back of a large $500 million deal that it's won. It's first under the new CEO, so the street is excited with the prospects because $500 million will accrue to the company in just 5 years. The tenure of the deal is 5 years. Infosys, Tech Mahindra, LTI Mindtree, these are all stocks with gains of between 3 to 5%. But the top Nifty mover today is M&M. That's up 5.5%. And it's also the best performing stock for the week with a 13.5% gain. So that's been the star.
Absolutely. IT's had a phenomenal week and a lot of those moves continue even today. In the broader market, I mean, now the Nifty's become so buoyant that it's actually overtaken the mid-cap index. Otherwise, it was the reverse. In the morning, mid-caps were doing better. But having said that, there are lots of names which are bouncing around. I mean, look at an Amara Raja, which is up 10%. Paytm, by the way, is up 10%. Many stocks here. Tejas Network, NetWeb, Mastech, obviously on this new platform that they're developing where they've got these NVIDIA AI capabilities infused in that platform. So market very excited about it. Plenty of names. IIFL Securities is just a long list of winners on the mid-cap screen, one would have to say. On the the large cap side of it, banks were dragging their feet earlier on. Even now they're underperforming compared to the rest of the market. Bank Nifty is up about 1%. But at least there's no sort of decline. And that's helped the Nifty's cause as well. And in addition, you have some heavyweights doing some pretty heavy lifting. I mean, look at Reliance, 2.5% up on RIL, 2.6% in fact. So that's a big contributor. There are some other names as well. We mentioned IT, of course. Beyond that, even an L&T, for instance, pitching in a little bit. So it is a very solid, well-rounded move. And indeed, ab ki baar, at least this Friday, it seems 400 par, if nothing else, Nigel.
Well, that's right. Brilliant looking screen. I thought we were going to be in for a quiet day with the market thinks otherwise. So good on the bulls. What a blazing move we've had. But let's see. All's well that ends well. We've got 58 minutes to go. Let's see how we end up with. Well, let's go across to our technical expert and find out what Mitesh has to tell us. Mitesh, it's that sort of a day, right? I mean, 450 points higher. We've got the US payrolls data that's coming out post-market hours. For the time being, the markets don't care. They're saying we've got a stable government, the NDA 3.0, and blazing away. Your take, where are we headed from here?
Yeah. So, Nigel, I think if you would have asked me today morning, maybe even yesterday also, I wouldn't have said that we'll test the recent highs so easily and so fast. This is like a V-shaped recovery, which typically is very difficult to understand and trade. But now the only pivot which is left on the upside is 22,340, 338, which was the earlier high. And once we cross that, we should then look at a test of 24,000 as well. So maintain your longs, but let's see how it reacts around 22,340. On the stock side, ITC is a buy with a stop at about 434 for targets of 451. And Balrampur Chini, that's getting past this 200 average, good candle, good volume setup. So buy here with a stop at about 397 for targets of 480.
Okay, thank you very much, Mitesh, for joining in. We'll come back to you in just some time. For now, let's talk about the market volatility which intensified on the counting day. Investors looking to buy the dip into mutual funds were left disappointed. They were not able to capitalize on the market fall despite transferring funds by the 2:30 p.m. cutoff time as systems gave way and orders failed to execute on time. Subsequently, the NAV that these investors received was that of the next day when the market had already recovered half of its losses and rallied 3%. So who was responsible for that glitch? Yash is joining in for more on this story. Yash.
Well, Reema, as you pointed out, it's quite a curious case where mutual fund investors across the country, went out to buy the dip, but apparently their NAVs, their mutual fund NAVs, did not buy that dip really. What had happened is on the counting day, which was June 4th, of course, looking at the reaction, the numbers that were coming in, the market corrected very, very sharply, about 2 to 3% moves on the downside as far as the market is concerned. But mutual fund investors went out to buy the dip to get a significant amount of benefit, expecting the markets to recover. That's what happened. On the next day, the market recovered almost all of its lost ground. But mutual funds would have, investors would have thought that they would have gotten that arbitrage of that recovery. But when they saw their NAV, they were quite disappointed because the NAV figures were based on the June 5th numbers, market levels, and not the June 4th levels. Of course, they missed out on that arbitrage as per SEBI regulations. Orders which get placed, if you're paying money against a mutual fund unit, if the money is deducted and credited to the mutual fund pool before 3 p.m., in that case, the NAV should reflect for the same day and not for the following day. We've been speaking to a lot of stakeholders involved in this particular transaction, and I'll quickly take you through what each of them have to say. BSE spokesperson has said that there was no glitch on their end, which is the exchange end, and there was some lag in receiving payments from the UPI channel for a few customers. Stock exchanges sources which we spoke to, they've said that the issue seems to be on the clearing corporation level. Because of so much load of lump sum payments in terms of mutual fund units, the systems could not handle it. There was delay in reconciliation, in settlement, matching of orders, which took those orders beyond that 3 p.m. limit, and hence the NAV did not reflect for the same day. One of the financial platforms, Grow, said that delayed mutual fund unit allocation was due to delayed money for movement between banks, exchanges, and AMCs. They are working with the entire ecosystem to ensure and understand what went wrong here. What we've been given to understand from the regulators end as well, our sources in the regulator tell us that SEBI has taken notice of this particular incident. They are of the view that no matter whose fault it is in terms of the machinery, the investors should not lose out, and their NAV should reflect for the day when the orders were placed before 3 p.m., that is June 4th, and not the June 5th NAV. What we've been given to understand is SEBI is looking into the matter. They've started the investigation. We'll have to wait and watch in terms of, first understanding where the lapse really or the default really happened, and then the penalty for the same. But one important point, the orders were almost double of, average daily mutual fund orders. And our understanding from our sources is that about 2 to 5% of the orders got impacted because of this particular lapse.
Okay, Yash, got it. Thank you very much. That's an important issue, and it was discussed at that RBI briefing as well today. So thanks for bringing us up to speed on it. We've got Prakash Diwan joining us on the show this afternoon. Prakash, thanks for joining in. So not sure what is this. I think all of us here at least thought it might be a quiet Friday after what's been an absolutely intense week, but no. What do you make of this? What do you make of this kind of a move? Because it's not been backed by FPI flows, at least so far this week. In fact, they've been massive sellers.
Good afternoon, Sunny. So, what the market today tells you is that we are back to the levels that the exit polls kind of, enthuse people to move to, right? I mean, the market was so enthused by the exit poll numbers, and it was just 50, 60 points short of where we are, higher than what we are today. So, if eventually the markets start kind of factoring in growth, they start factoring in stability, continuity, and that's exactly what today's 400 plus points tell you. I don't think anything much has changed between today and, let's say, Wednesday. It's just that, all the uncertainty is getting put to rest. Today's speech by the Prime Minister actually was so reassuring to a lot of people. And his lightening of the whole the temperament, the tenor of the voice, everything was giving an indication that things probably don't seem to be as difficult on a coalition that people were penciling in. The other thing that's important is that everybody is now kind of talking about irreversible progress on some of the key issues like consumption, infrastructure, growth towards that Viksit Bharat milestones. So I think the market's kind of taking cognizance of that. IT, of course, has contributed significantly, Survi, because that was one pocket of underperformance. I'm not sure whether fundamentally there's anything that's changed. In fact, my worry is, there could be a time where the rupee could strengthen against the dollar in the next month or so, or maybe more longer. And if that were to happen, IT might not be in the sweetest of spots. So, I think it's more to do with a FOMO that's spread into the IT pocket, especially when you see a lot of the small cap, mid cap IT names also perking up. But overall, I think the market's in a good mood. Monday onwards, will probably be life as usual. You'll start talking about growth and, re-ratings and P expansion and all of that. Of course, sectors could change, names could change. But as I said, if you stick to fundamentals, I don't see any reason why people will not get rewarded.
Prakash, afternoon. One particular mid-cap IT which is on fire today is Mastech. So one of their platforms will now be powered by NVIDIA's supercomputing prowess. So everything gets that much more advanced. The company said that, the response time has come down because of this advanced platform from 3 to 7 days to just 1 second. So the street is excited with the prospects. Is Mastech a stock that you look at, a company that you've tracked?
No, absolutely, Rima. This announcement very clearly puts Mastech into a different growth trajectory. The question is, how long does this exclusivity or this advantageous leverage stay with Mastech? But even otherwise, before this announcement came, they were working on a lot of projects which actually are way ahead of the typical competition that we compare it with. It's strengthened its balance sheet. We've had enough of the last couple of years, we've seen enough in terms of it stabilizing with this new structure on the balance sheet. And finally, it's kind of looking at organic growth at a very rapid pace. And this only accelerates that. So I think it was always very valuable in that sense. This just makes it different. In fact, I'm surprised the move is still restricted to just about 8-9% today. It could actually be much more once people understand how strongly favorable this will be in terms of the numbers for the next couple of years for them.
Okay, do stay on. We've got a CNBC-TV18 exclusive for our viewers, and this is regarding the domestic airline operator SpiceJet. The Airport Authority of India has told CNBC-TV18 that SpiceJet is operating on a cash and carry mode at all its airports in India. However, SpiceJet is denying the statement. Madiha is here to tell us what this means. Madiha, what's happening at SpiceJet and why is it put on cash and carry?
Well, an airport operator puts an airline on cash and carry mode after its dues exceed the limit granted by the airport operator against the bank guarantee or security deposits. In SpiceJet's case, the Airport Authority of India told CNBC-TV18 that SpiceJet is on cash and carry mode at all its airports in India. It added there have been a number of instances in the past where SpiceJet has delayed in making regular payments. Remember, airlines have to pay the airports for using services like landing and parking. Cash and carry is an arrangement where the airport operator collects payment in advance before the aircraft's departure. Now, AAI told CNBC-TV18 it is up to the airlines to deposit the payment in advance either before the departure of each flight or make advance payment to cover more than a day's operations, which is what is happening with SpiceJet, where it has to pay in advance for using airport services. This is very different from healthy airlines, where they get a 15-day credit facility where they clear their payments every fortnight. Now, airlines have to deposit a certain amount as bank guarantee or security deposit with the airport authority. The AI does not immediately jump to cash and carry. It holds several discussions with the company to clear payments, and only when the defaults exceed a certain amount of the bank guarantee, then the AI initiates cash and carry mode. We reached out to SpiceJet for their comment. The airline says it is not on cash and carry basis, adding that the airline has bank guarantees worth 40 crores deposited with AI. The fact that the airline is not being able to make payments on time is an indicator of a severe liquidity crunch in the airline. Remember, SpiceJet is yet to release its Q3, Q4 and FY24 results. The airline has been able to raise over 1,000 crore of the 2,240 crores of the fundraise it announced in December 2023.
Okay, all right, got that, Madiha. Thank you very much for the details over there. So that's the latest on SpiceJet. Prakash, of course, is still with us. Prakash, just wanted to get your sense on the way a lot of these IT stocks are reacting and moving. Of course, there's news starting from Wipro itself. And then Mastech is talking about some new platform, which is, AI powered. But, beyond some of these IT names, would you pick anything else in so-called defensives? Because market's been swinging to both extremes. It's economy one day, defensives the other. How would you look at it?
I mean, I don't know. Defensive seem to be also kind of getting re-rated a bit too fast. You had FMCG do very well in the last 3-4 days. Pharma already, has been doing well even before this bout of volatility that we saw. I would rather look at something which is much more uniform and much more sustained in terms of what you could expect. And look at airport infrastructure. And then it's just a coincidence that you had this story on SpiceJet. I can tell you the kind of traffic that is finally emerging, at most airports is much more secular than what we thought in terms of seasonality, Surbhi. And in spite of the fact that Airbus is the only one that's able to supply airplanes and Boeing is still struggling, you have so much of a traffic increase. The next round of growth in Indian airports is going to be actually from a lot of wet leases that will come to us rather than go in other markets which probably don't have great PLFs, right? So it's the same asset that starts getting used here in a much more effective way. People are willing to pay those kind of rates and all. I would still buy into an airport operator. Of course, the pure play at this point is GMR. But at some point in time, I'm sure Adani Enterprises will hive off that business also, and you could look at. But look at GMR airports from a valuation perspective, always seemed stretched because the turnaround was still not kind of penciled in. But at these levels, I think you'll probably start seeing a very great impetus in terms of earnings growth. And then, of course, the stock will also start justifying that in terms of PE expansion. So I know it's not a defensive in that sense, to answer your question specifically. But while you give time to FMCG and pharma and IT to cool off a bit, you probably start cherry picking some of these niche plays in the infrastructure sector.
Okay, all right. I just want to bring to your attention that now the recovery from the lows, and I think we should get it up for our viewers on the screen, 2,000 points from the lows that we saw on the election day. I think let's get that up. 23,282 is what we touched. Right now, that's this minute itself. And a couple of sessions ago, we were at 21,200 and 281. So it's a full 2,000 points recovery in a matter of 3.5 sessions. That's the kind of recovery that we've seen on the Nifty. Well, Prakash, hi, good afternoon. Bit of deja vu. Now I'm going to ask you about the cement stocks. I'd asked you, I think, a similar question close to around 6 years or so ago. Mr. Naidu is back in the hot seat. And, Andhra Pradesh participants believe that this is it. We're going to see that Amravati project, the big capex plan that will play out, that, a bit of replication of what was done in Singapore. All those talks 6-7 years ago is what we heard. Now the street believes this is going to happen in this tenure. How do you approach them? Stocks like Sagar, NCL, KCP, NCC, KNR, all of them are buzzing on this sort of a news. Your take?
Yeah, so of course, some of them may not have a pure cement play like, KNR and all, and they're more focused on the execution. But KNR is probably one of the best, it's one of the most well-run, well-governed businesses in this space, which can otherwise tend to get a bit messy on corporate governance. But look at where it is. In fact, if you take the price on Wednesday, it was available at a PE multiple, which was probably one of the lowest it has ever experienced. So, and with road construction and the new business of water management that they've got into, Nigel, I'm very positive on that. KCP is the other one, which of course has, and I think you covered it a couple of days back, if I remember correctly, about the ramifications of a political linkage, and then of course Amravati being one of the projects that is close to the heart of the new government in the state of Telangana. If that were to happen, of course things make a difference. But KCP by itself is valued very cheaply. I mean, you have the sugar business, you have a little bit of that engineering business, you have cash on the books. So to be honest, it would get re-rated even without all this. But this just becomes a good trigger. So if I had to choose two out of these names that you mentioned, and then I can tell you I have got out of Dalmia as a pick because of whatever things are happening, the acquisition getting into a little bit of a tizzy. But I would believe KNR Construction definitely stands out, while KCP is a special situation kind of an option.
Okay, all right, Prakash, we'll leave it there. Thank you very much for joining us today, and it's always a pleasure speaking with you. We'll take a quick commercial break here. Market is now 40 points away from an all-time high. I mean, so that's essentially the headline at this stage, and it'll be quite something if we end the week, and by 330 will be at a new record high after all that has happened over the course of the week. As I said, not a V-shaped recovery, but a I-shaped recovery, and just quite something, absolutely something. We'll take a break. We are back, and we'll have Sanjay Parekh, founder, CIO at Soham Asset Managers, on the other side for some conversation.
Welcome back. The sensex is at an all-time high. It surpassed the Monday exit poll high of 76,738. So it's well above that level. On the Nifty, we're still a couple of percentage points away, couple of points away, not too far away. But the Sensex today has scaled a fresh all-time high. It's a 2.2% rally. It just looks like the markets want to, achieve this milestone today only. Why wait? This has been a momentous week for the markets, and they just want to achieve this milestone today. 2.2% for the day, and for this week, it's now a 3.8% rally. One of the big movers that we want to talk about is Amara Raja, and that's surging on the back of an election boost. But what's the election connection? Hormus joins in with an overall analysis on the stock. Hormus.
Well, it seems like the bulls have taken the Raat Gayi Baat Gayi a little too seriously, I guess, considering the move that we are witnessing on the street. But they are being powered on by a lot of these battery names and all of these Andhra Pradesh link stocks. We've been speaking about them all through the week, and Amara Raja is no stranger to that. And the last 3 days has seen the stock surge almost 30% as Amara Raja, and that is also because of the Andhra Pradesh connection that it has. Now, Chandrababu Naidu being elected as the Chief Minister once again, the TDP. Now, the connection to the party here is that promoter of the company, Amara Raja, this is Jaidev Galla, who's been an MP from Guntur. He's represented the TDP between 2019 and 2024. He did not contest the election this time around, but that's the TDP connection to Amara Raja. And recently, as early as yesterday, BNK Securities also came out with a note on the company. It maintained a buy rating there. It raised its price target to 1,500 rupees from around 1,080, and they raised its target multiple as well to 20 times from 14 times earlier. And they mentioned that Amara Raja is likely to see a better performance going ahead, and that is led by a two-pronged business strategy that they have. One is, which is of course the value maximization in their core business, under which they would expand their existing core lead acid business, and this lead acid battery demand is likely to remain robust in the telecom segment, is what they are saying. And the second one, of course, being the establishment of the new energy business that the company has been spending a lot of money on and is focusing on currently as well on priority. The emergence of lithium as an alternative energy business, according to BNK, will fuel the next leg of growth for Amara Raja. And according to them, the company's already started supplying battery packs to the telecom companies. And they also mentioned that the focus on battery cells for the electric two-wheeler market is also on the radar for Amara Raja as well. And among the last few factors, they list that OEM volumes are likely to improve further. The replacement market, which contributes almost 40% to its overall top line, that is likely to improve further going ahead. And the lithium-ion battery plant that the company has been working on may start commercial production in the second quarter of FY25. On a valuation basis now, as of FY26 price to earnings, Amara Raja trades at 21.4 times. In comparison, Exide already trades at 34 times FY26 price to earnings, and both these stocks are already trading above their respective 5-year average multiples, which is at 15.1 times and 25.6 times. So as of now, the party continues, the bulls are happy, and a lot of these battery stocks are also powering along as well. Back to you.
All right. Thanks very much, Hormus, for that. That's an interesting sort of look at what's happening with Amara Raja. Exide was all the rage for weeks, but Amara now pulling into the fast lane as well. Sanjay Parekh is with us, founder and CIO at Soham Asset Managers. Sanjay, good afternoon. Good to have you with us here on CNBC-TV18. Of course, you're slightly overweight on autos, but I mean, you have the big guys, right? Ashok Leyland, Mahindra & Mahindra, there's Samvardhan Motherson, Aisha, and a few more. But just to get a sense of whether you're surprised by this sharp turn that we're seeing, the ferocity of the turn, and where does it leave us in the very short term? It leaves us exactly where we were last Friday. And if you go back to the conversations then, it was, I mean, generally the refrain was, things are expensive, one has to be very choosy. You're basically back there very, very quickly.
Yeah, no, Prashant. So, I mean, it's been a whole week which was very, very volatile. And certainly, the way we approach it is, one is an active zone where if, markets are at a particular level and stocks are at a great level, you be very, very active because market is not going to leave too much of opportunities. And then because of this volatility, it's a zone where you become inactive actually, because, you anyway invested at 92, 93%. By God's grace, funds are doing well. And, you wait for a right opportunity or the right level for markets. And it's better to be inactive for a while till you get again any stock or market levels, because given the volatility in the market itself, it will throw opportunities on both sides. So you could buy if there is a big fall and also reduce. So you have to be a little tactical also. And then, have the core philosophy of invested in your stocks, that is. And that's how we are approaching this markets.
So, did you buy anything, sell anything? Did you buy anything on Monday, sell anything on Tuesday, or buy anything on Wednesday? And if you can give us a sense, so for example, if the portfolio value was 100 last Friday, what did it fall to? And where is it now?
Yeah, so we are back to our peak returns we were at 75% on peak returns in 2 years. So now we are today at 74.5%. And our performance is just between 28%, 28.5% is now 28%. So that way we have fairly insulated this fall and rise. But of course, on that day, given a cyclical tilt, when the fall was sharp at 5.9%, we fell a little more. And then now again we'll come back. So it is, and to answer you, we were totally inactive on Monday. We're totally inactive on Tuesday. But once we got clarity on Wednesday morning, that things are, the NDF government will very likely form, and, markets are a little nervous, then we increased our exposure. And that was across the board in financials, in our stocks, in energy. So, it was, we increased our exposure and that helped us, So now our cash levels are low. Even IT we added recently last week, because after 2 years of big underweight, we increased our weight by 2%. And now we are underweight, but we are at 7.5%. So because now, while we still remain underweight on IT, because this year is challenging, but if you take even 10 to 12% return and 3% dividend yield, then in this environment, 15-16% return is not bad. So that's why we increased our allocation to equity, to IT. So that's how we've been approaching to markets.
And you're saying that you bought individual stocks on Wednesday?
Yes, Wednesday first half. In financials, lead financials, as I said, this new energy company that we already own. So we just increased our exposure where we knew that it was, they're attractive. 55, 760, ICICI. These were all, you just had to be, the broad picture. If we did preempt on Wednesday morning that things are fine, and hopefully, things will be fine. And that's and that's what we believe, that in larger caps every month, wait for that winner at times. And you don't, where you think there's an opportunity. And if you take a last, you could have winners, And that's the approach we are having, even in mid and small cap, but more so in large caps.
Sanjay, but even in every bull market, there are deep corrections which go beyond 5%, go up to 10%, sometimes even more, up to 20%. We haven't had lasted only one day.
Yeah, so Ima, one is, we have 15 crore active. Is very, very powerful. A tweet wherein they had some data saying on the day where I'm yet to verify it, but second thing, rightly. So, once market realize that the NDA government will further stability will be there, all our balance sheets are firing. So under the Prime Minister leadership, even with allies, they would not want to derail this and take it forward when they worked so hard for it, including the allies. So they've never made us nervous that, anything on, on further accelerating of growth, there'll be any big dilution. We were not so worried, particularly in areas of investment and infrastructure. There could be some issues around oil prices, where I think they may take a pause. A little bit on agriculture, where maybe, they'll maybe on MSP prices, they will want to be a little more populist. But overall, I think directionally, after such a hard work and all our balance sheets being so good, they will only want to accelerate it further. And that's an answer to unemployment also. Inflation also today, respected governor said, is reasonably in control. And that's why I believe that, we are on a growth path. And rightly, that's why we are not getting big reactions. With the only challenge I said is valuation. So whenever you get that pockets of big underreaction, you'll see markets being bought into.
Okay. Hi, Sanjay. Good afternoon and good to see you. Well, Sanjay, one space where you're overweight in comparison to the benchmark is the telecom space.
Yeah.
And you're not playing Vodafone Idea directly, but you're playing Indus Stars, which is, somewhat of a play. If Vodafone Idea survives, then they get bulk of their money. And it appears, on the whole, you're bullish on the telecom theme. The couple of stocks that you'll have over there, the Bharti Airtel stock, as well as the PP. Tell us, what are you factoring in here? A price increase that comes about, maybe a big IPO, and you must be factoring in three-player market, right?
Yeah. So one is, of course, as we discussed last time also, broadly, the opportunity for the digital space is huge. You will see conversion from 2G to 5G. You will certainly see not one, but two pricing increase in the next 18 months. And, the pie in terms of the overall AGR revenues will certainly go up. So here is where, Bharti being a leader, they are having very strong revenue market share. They are also strong in postpaid and extremely efficient player, and will move from high capex to mediocre capex and hence FCF generation. So while valuations are now rich, and I'll not recommend anyone to invest in the near term, but from a longer term point of view, we still feel there's a very good runway for growth. And you rightly said, while we didn't participate in Voda, but Voda clearly would now survive and certainly do better. And we always wish well, having seen that for 15 years. And that would mean better times for tower companies like Indus, where the analysts were writing off 4,000 to 5,000 crore of EBITDA. And we luckily earlier we bought around 220 to 30. Now, not only that 5,000 crore EBITDA will be recurring, but there'll be growth on that. So suddenly a company which was looking 11 minus 5 at 6,000 crore is now 11,000 crore plus another 2,000-3,000 crore of EBITDA, which is 13,000 crore. And then slow growth ahead. And that's why it's pretty reasonable even today at 7.5 times. So we are holding on that as well.
Okay. So, Sanjay, to round things up, are you looking at any further incremental changes? I mean, we've been having this debate pretty much throughout, given how the market quickly moved to FMCG. Then there's been a lot of buying on IT. What would your final advice be? All things put equal, I mean, we are almost at all-time highs right now. Should one be taking more profits off the capital goods / manufacturing side of their portfolio and rotating into some of these consumer / defensive names? What's the final advice here?
Yeah, so, defensives internally also we discussed that, it's important to get the entry price right and, the growth price earning equation right, growth valuation. I mean, today also, FMCG, we are zero today and it's recently moved up. So while we like the consumer theme and we are participating through other stocks, but here, your company is at 10% growth at 45 times, 50 times, even on implied growth, we're still not comfortable. So on the delta, they may move up. Some of them have done well, but, we are happy avoiding it. On the IT space, I said we've increased our weight, knowing that, while this year is going to be very tough, But hopefully, slowly and steadily, 26 could be better. And it's difficult to exactly pinpoint whether 26 is going to be better. Hence, are underweight. But it makes sense for high ROC companies with dividend yields of 3-4%, and FCF yield of 4.5%, to have some exposure increase in this environment. And if we can get 15% return with the right entry point after a 2-year underperformance, we were fine. So that's where we increased our weight to IT. Overall, domestic themes were still very, very positive. You could have bits of here and there in a sense, but generally entire domestic theme. And on capital goods, what you asked is right, that we will be cautious to add on the euphoric valuation, but there will be always pockets of opportunity. So what we are looking at is opportunities in each segment, bottom up. And in that volatility, the stocks that we like, if we can get those at the right valuations, we are going to add.
Okay, Sanjay, it's always a pleasure, and thank you very much for joining us. And coming off a little bit from the day's highest point, but we're still solid, 480 points at this stage. We'll, I think, take a quick commercial break here. We'll come back and we'll tell you some short-term trading ideas here. What can you do? Mitesh will be with us to help you with that. And then we come back on the other side with more conversation. Stay with us.
There is a move in oil marketing companies which is also underway in the last 10-15 minutes. So HPCL, BPCL, IOC are also seeing buying. Pull that intraday up for you on your screen. The Nifty is hovering around 23,300. Still some distance, very close to its all-time high levels, but unable to cross that hump, that final stretch to get to the all-time high levels. But sensex has crossed its all-time high level, 1650 up on that benchmark. Mitesh is now with us for a few BTST calls, which one can take for the weekend. Mitesh, hi, what do you have for us?
Yeah. Well, I think Tata Steel has broken above earlier highs. That could be a good BTST trade. Keep a stop below 177 and a target of 183, 184 for tomorrow can be looked at. The other one which I like is an IT name, and we have had a lot of buy calls there. I'll add one more to it. TCS is a BTST with a stop at 38.75, and look for a target of around 39.40.
Okay, all right, Mitesh, thank you for that. There's 18 minutes to go for close, so we'll come to you for more in a bit. But I want to talk about one particular name which is jumping some 14-15%. IIFL Finance is the stock, right? Of course, the RBI had imposed restrictions with regards to their gold lending, gold finance business some time back. There was an audit which was underway. Ritu is here to tell us what's the latest and why is the street excited. Ritu, over to you.
Well, Prashant, perhaps it's to do with the fact that earlier in this week, IIFL Finance notified the National Stock Exchange that special audit instituted by the Reserve Bank of India has been completed. Although, of course, the findings have not been made public, but we do understand that the auditors have submitted them to the Reserve Bank of India. Now, this is one crucial step, that is completed along the way of the restrictions on IIFL Finance eventually being lifted. We've been given to understand that it is Jaipur-based Rajvanshi and Associates that was appointed by the Reserve Bank of India to look into IIFL Finance gold loan book, and they have now made these observations and submitted their view to the Reserve Bank of India. If you recall, in the case of Bajaj Finance, the company had actually approached the Reserve Bank of India after the audit to say, look, we're now compliant on all of these issues that you have flagged, and therefore to review the audit, after which the restrictions were lifted. In this case, we did reach out to our sources in IIFL Finance to understand whether they've made their case to the RBI after the audit was concluded, but that is not the case. They are awaiting the next steps from the Reserve Bank of India, because if you recall, the RBI, when placing these restrictions on their gold loan business, had said that once this special audit is concluded and the company is able to rectify the deficiencies identified by both the special auditor as well as RBI's inspection report, then the RBI is going to review these restrictions. So now that the audit is over, the next step will be for RBI to come come back to the company with their comments for the company to say that they have satisfied the conditions for this, restriction to be lifted. Keep in mind, right along the start, when these restrictions were first placed early in March, Nirmal Jain in a con call had said that the company's already started working towards compliance. Maybe one of the larger issues was with respect to the cash dispersal, again with RBI reiterating the limit. The company itself at least has claimed that whether it is LTV or appointing external auditors to evaluate the gold loans, all that has already been done. So now, of course, the ball is in RBI's court.
Okay, the ball is in RBI's court, and we'll watch what comes out of there. But the audit is done, and now, of course, we are waiting for sort of, what next. And that, of course, is RBI, as Ritu said, we'll hear from the RBI. Well, Ritu, thanks very much for that. Hemang Jani is with us. Hemang, you heard Ritu, IIFL Finance, big rally. Stock fell from about 700 to 350 levels when that RBI thing came. It's now clawed back to about 460. Have you looked at it lately?
Yeah, good afternoon, Prashant. I think if we have any positive surprise post this audit inspection, and if we have some relaxation, obviously there is going to be a lot of interest, because from the top, as you said, the stock is still down almost about 25-30%. The only issue is that, given the current situation, what kind of growth the company will be able to display, and more importantly, when the RBI allows them to do their normal activity in terms of business, that remains to be seen. But I would not be very comfortable buying into it at this point of time, because typically, though people can have expectations, this kind of RBI go ahead can take some time. So not too comfortable buying into it just for that news.
Hemang, we were just chatting with our earlier guest, Sanjay Parekh, and he was telling us that he's cut his underweight on IT. IT's gone through a 2-year period of underperformance, and it might give steady returns, even though FY25 may still be a subdued year in terms of financial parameters, but returns may be steady. So they've cut their underweight. Where do you stand on IT? Would you recommend buying any of the IT stocks?
So clearly a good opportunity, though the sector, by the way, has moved up almost 8%. Many stocks have gone up anywhere from 5 to 10%, and some of the mid-cap stocks have gone up even higher. But given the way the underperformance was there, people are looking out for some opportunities. So what we like at this point of time is HCL Tech. We also like Tech Mahindra and Birlasoft. One has to be very clear that the numbers which are going to be out, in the next quarter, are not necessarily going to be great. But I think, in between, because of the entire focus was more on the PSU, CAPEX, people had kind of just forgotten about IT. It's showing a little bit of green shoots, and I do think that there is some more room on the upside.
Well, it's been a week of extreme moves. On Monday, the Nifty was up 733 points. On Tuesday, it was down 1,400 points. On Wednesday, we had a very sharp recovery U-turn in the market, 700 points. Thursday, a bit of consolidation, but with a positive bias, 200-point gain. And today, we followed it up with a 460-point rally on the Nifty. Sensex at all-time high levels. The Nifty is still a little bit of a distance, 50 points away from that level. Hemang, do stay on. We need to slip into a very short break. As we do that, we'll get you some excerpts from our conversation with Mihir Vora, Chief Investment Officer at Trust Mutual Fund.
A little bit of decline in the vote share in the rural segments. There might be some refocusing onto the welfare schemes.
Yes.
So that's what the market's trying to guess or double guess. Whether it happens or not, I don't know. But the market's trying to preempt that. And plus the fact that we are just on the cusp of the monsoon, and all indications are that it's going to be a normal monsoon. We have a situation where the rural economy has been, recovering at a rate lesser than the urban economy, and especially the higher income segments. So the K-shaped is something that was anyway on everybody's minds, and probably the election voting patterns highlighted that a little bit. So you might see some realignment there. The existing scheme, the Pradhan Mantri Awas Yojana, has been successful. So you might see extension or even expansion of that scheme, and plus some more support to rural as well as semi-urban housing, essentially trying to alleviate some of the stress in the lower middle class and the lower income category. We were quite underweight on the low-end consumption, as we've been talking about. We've been more on the premium end consumption theme. So we've kind of realigned a little bit along those lines, because not trying to preempt any policy measure, but just to de-risk the portfolio when you have extreme in terms of portfolio overweights and underweights. In volatile times, you kind of tend to come closer to the benchmark.
Welcome back. 8 minutes left to go. Good advanced decline ratio on our hands today. While the mid-cap index is up 1.5%, trailing the frontline indices in terms of gains, the advanced decline ratio stands at 5:1. Some of the big gainers are the ones perceived with who could benefit from the political mandate, with closeness either of the parties who won. Hemang Jani, we've been in conversation with him. Hemang, we've been highlighting stocks like Heritage Foods, KCP, now even in Amara Raja, where there is some perceived closeness, some political ties, etc. Many of these Andhra-based cement companies like Ramco Cement, etc. too, have been seeing some strong gains. Is there a stock which you would play on the back of this development where the fundamentals also back the story?
Yes, Rima, we've seen a strong action across some of the regional players, Andhra players, or where there is any sort of a political affiliation like Amara Raja. So if one wants to really participate there, I think there are 2 or 3 names that one can look at. First one is Ramco Cement, which actually has not done well in the last 2 quarters. The stock has started showing movement, but almost about 30% of the revenue is being generated from Andhra. Also the fact that you will see a much better utilization of the capacity. So that will also be a big benefit. Sagar Cement is something that we've been liking. I think we discussed that yesterday also. And is at about $42 per ton kind of a capacity, a 10 million ton plant that they have. And it looks quite promising to us. Apart from that, I think McDowell or United Spirit is something that was buzzing quite a lot because of the current duty structure that was put in place. There was practically nil sales as far as United Spirit is concerned. But if you have any change over there, then typically Andhra contributes to almost about 4 to 5% of the revenue earlier. So I think McDowell or United Spirit is another stock that one can really look at to play this thing.
This Paytm is, showed a big move. I think the last time I checked, it was up close to about 10%, still up 10% circuit up on Paytm. The only corporate news that we had fundamental was the fact that their market share in UPI transactions has come down. So what explains this 10% move?
So Rima, typically, you keep hearing about, Paytm maybe, acquired by a big corporate house. And that is something that is not very credible kind of an information. But my sense is that at some point, whenever, let's say, some M&A activity happens, and if it happens a bit early, because typically in fintech space, if there is a RBI ban and if the time lag between the ban and the actual M&A activity, or when the company is able to roll out their product or services, if the gap is too much, then there can be too much of an incremental damage. So if it happens earlier, it's surely going to be better. There's going to be much better value creation that may happen, but nothing credible at this point of time.
Okay, nothing credible at this point in time. Hemang, what are you pushing to your clients now in terms of individual ideas?
So surely, I think consumption is going to be the core theme. So not only the typical FMCG, but also some of the discretionary, consumer plays, maybe something like Titan, United Spirit is something that we've talked about. Apart from that, ABFRL within the consumption theme is something that we like. And we don't think the PSU as a theme has completely, gone out of a window. I think you will have certain pockets where there is going to be a lot of interest. So GAIL, some of the city gas distribution companies like Mahanagar and Indraprastha is something that we like. And we think that there is a possibility of a big GST related reform announcement, and that could really materially change the earning that the market is currently working with. So these are some of the ideas that we like at this point of time.
Hemang, the move in telecom names like Bharti Airtel, Vodafone Idea, and then the related play Indus Stars over the last couple of months has been on the expectation of a tariff hike once the election verdict is out. Now that we've got a election verdict, which now you can say is in line, it's a status quo kind of a verdict. When do we expect a tariff hike, and is it already in the price because stocks have run up? Will we see a positive re-rating once we get a tariff hike of say 15-20%, which the street is expecting?
So yes, Rima, you have put it very correctly that a part of the ARPU increase or the price increase that the market was working with has already been there in the price. If you see, Bharti has been a big outperformer. Even post FPO, Idea has seen a good amount of interest. The only stock which has not participated as much is probably Reliance, maybe because of the nature of the business. So I think, the timing of the ARPU increase is not known, but our sense is that this year you will see about 6 to 7% kind of an increase. And over 2 years, you can look at about 15 to 20% kind of a ARPU increase. And the biggest beneficiary of the ARPU increase or the price increase would be Bharti for sure, because typically last 2-3 years, if you see, their earnings has grown much higher than even Reliance or Idea. So it would make sense to have some sort of allocation in Bharti for sure. And Idea, I think, is more of a tactical play, maybe another 10-15% kind of an uptick, but not too sure about a bigger upside there.
Just one final word. We're counting down, to the close now. M&M, top Nifty gainer today, 5.5% up move, 13.5% for the week. Where do you stand on M&M? There was a recent downgrade on M&M because the stock has already doubled. But do you think now with the prospects have improved? Because you spoke about consumption, and M&M is a play on rural consumption with tractors.
M&M is firing on all cylinders. If you look at the SUV business, the growth is 17%. The recent launch, 50,000 booking is a big positive. I think the biggest delta change for M&M will come from the tractor business. About almost 30% of the business is coming from tractor. And we think that there's a case for, big revival there, and both domestic market and export could see that change. So as a rural theme, as a revival in the tractor business, this looks quite attractive. The stock has run up, by the way, but I think in terms of valuations and this theme perspective, this is still looking compelling to us.
Thank you very much, Hemang. Just a minute left on the countdown now as we wrap up what's been a momentous and historic week. The bulls have charged ahead. It's a fresh all-time high on the sensex. The Nifty is closing with a gain of 2%, 440 points up, 450 points nearly on the board, but still about 60-70 points away from its all-time high levels. For the day, a 2% gain. For the week, it's been a rally of close to about 3%, and the markets are, on track for the biggest weekly gain of 2024. And it's been a week where we've seen, markets have gotten whipsawed. On Monday, we had a big smart rally on the exit poll results day. On Tuesday, there was a sharp reversals. The bear, markets nosedive close to about 1,400. And then on Wednesday, Thursday, Friday, markets have only charged ahead. Lots of narratives. PSU's made a comeback over the last couple of days after getting beaten down on Tuesday. FMCG did well. The Nifty FMCG index ending with a gain of about 6.5%. And IT was a surprise winner this week with an up move of 8.5%. In terms of individual frontline gainers, M&M did well today. Ultratech cement stocks, metal stocks higher, Tata Steel, Power Grid, Titan, Bharti Airtel, NTPC, JSW Steel. Big moves seen on all these stocks. Well, with that, we're going to take your leave on Closing Bell. From the entire team, thank you very much for watching. But don't go anywhere, because our very special Editors Roundtable comes up on the other side.